Stock tip. Best stock setups.
So here we are again with a new episode of Stock Tip Daily Update at the end of a crazy week. You can name it anything else because it was a pretty hectic week and pretty crazy. As you can see, we've ended the week pretty much on the same level we've started. Actually, a bit in plus if you take a look at the weekly chart, and for the time being you are still in the position where you can say where the market is heading. Is the market heading north, or is the market heading down, respectively south? At the moment you definitely can tell. Many were expecting with the Russian-Ukraine war that the markets would tank and that we would see new lows, and they did for about an hour or so. And then they made up all of the losses and more in yesterday's trading hours, and today we've made another 2.2% plus, and again we are finding ourselves at an inflection point. Which one is that? So this would be this trend line here. So this huge, very important trend line. Basically, this is the trend line of our correction. So in the last 2 days, we've managed to cover about almost 6%, and from here to the all-time high, we would still have about 10%. So if you think about it, we've made pretty much 40% of the whole correction in 2 days. We've made them up. So of course this would be a most ideal case that we would have a V-shaped correction in in a couple of days, or 2, 3, 4 days we would reach our previous highs here. So this would be optimal. This would be a dream come true. Many of us would be seeing a fortune before their eyes if that happens. But the markets could just as well be heading down again. As you can see, we are pretty much heading in the direction of the 20 moving average, and after we hit it, we might just as well continue heading south again. So it remains to be seen how the markets are going to fare. Encouraging is the fact that the last small corrections we pretty much had a V-shaped recovery like here, and a pretty aggressive one. So 1, 2, 3, 4 days, 5 days, basically in a week or so we were back at the all-time high here. The last one before that in March 2021, and this is still October. But October is pretty much the same deal here. So a V-shaped and then turned to a double V. But also here 1, 2, 3, 4 days, let's say 7 days, and we were above the all-time high in just 7 days time. So and that is the promising thing. I'm still looking for the March correction show. So no, this is already the Corona correction. So here we needed a bit more time than the rest. So you see here we needed 5 months time to reach the all-time high. So beginning with March up until July, so beginning with let's say February up until July or August, so 5 to 6 months. But the rest of them were pretty fair, pretty small ones, and we recovered pretty quickly. So here, for example, or I'm still looking for the one in March. I think this is it, or here. The other example. So very small recovery, and here again very quick recovery, and we may just hope that we could get the same one. Also encouraging is the weekly chart. For if yesterday the weekly chart was everything but optimistic, now we have an sorry, how do you call this? And now we have the opposite of a shooting star. Doesn't matter. So this is one of the most bullish candles out there, and that's another encouraging thing to look at. So I'm hoping for a V-shaped recovery and for a quick jump back to the all-time high, and hopefully if the history tells us something, then we might reach 4,900 or 5,000 in the S&P 500, and like I said, that would be ideal. We will see our fortunes rise to the roof and beyond. But don't forget, the other possibility is that we get a negative week and another one, and then we soon hit 3,700. So this is the other possibility, because we still can't say if the correction has ended or not. Let's take a look at the tech sector. So the tech sector isn't looking that great, but still we managed to finish the week in force and definitely above this support line here. So this may be an outside reversal here, a huge outside reversal. Also the volume was pretty impressive, like it was in the S&P 500, but it remains to be seen if this is enough for the big investors to jump back in. So yesterday they pretty much showed some strength here, but today it was mid volume, so average volume here. Also average volume, so not above average volume. The IVM is also looking pretty solid. So here we have also breached our support line, only to end the previous day in strength, in full strength, and today we've consolidated a bit more and we finished actually above the 20 moving average, above a descending 20 moving average. So it's important to say descending because that's the direction of the trend. Here you also see the descending 50 moving average. So this is a negative trend here, descending trend. But for the time being, at least if you take into account the last days, and also a positive trend. Let's see how this one looks in the weekly chart. So you also see here this bullish candle in the weekly chart that was broken down, and the last 2 days, with the help of the last 2 days, we've managed to recover, and we pretty much have a lot of strength here at the end of the week. So let's see what next week is going to bring us. This may have been enough of a consolidation for the IVM. You see here just more than a year, or pretty much a year or so, consolidating and correcting, and it might be time now for let's take it back a notch. It might be time now for a nice move up. It could be that this is a long overdue move up, like it was in gold. DAX, how did the DAX fare? The DAX also with a pretty similar thing here happening. Also 2 positive candles, and the weekly chart is also looking like a hammer. So hammer, that was the formation I was talking about, and I couldn't remember it, sorry. So also pretty much looking like a strong hammer with a lot of volume. So perhaps if the American markets are pulling up, then the DAX will follow suit like it usually does. But you must also take into account that financial markets in Europe are prone to react a little more aggressively to the ongoing situation here in East Europe. Then the euro to US dollar pretty much tanked here as Russia started attacking Ukraine, and then recovered. And today we finished with an 0.5% in plus. We are still in this trend canal, so this is starting to look like a trend canal for the timing. Sorry, pretty tired. after the vacation. So the next target would be somewhere in the reach of let's say 1.15 or 1.14, and support in the reach of 1.11. And then my oil ETF recouped a little and might be heading back up again. So this might be the consolidation needed for a good breakout here. I hope not, because I'm positioned on the other side. I'm positioned on the short side here, so I hope not. But my stop remains where it is, and my risk is since the beginning pretty clear, and I don't want to change the strategy anytime soon. So gold had a weak day, a very weak day, but consolidation was bound to come, and I hope this is just a nice consolidation. So here in the weekly chart you also see a shooting star, and perhaps bigger consolidation is bound to come to the 9 or to the 20 moving average. I think to the 20 moving average. So I think gold is going to fall a little to 1.71, so 171 or 172. And of course, if gold had a negative day, then I can't expect anything more from silver. Silver had pretty much the same day as gold and mimics its actions. So what is a strategy at the end of this trading week? So the strategy remains pretty much the same. I still think we are in a neutral phase, like I've written on the website stock-tip.com, and I think we just have to wait and see, because we are very well positioned here. Let's take a look here. So we are very well positioned. We need another 9 or 10% to the all-time high, and if we are going to reach our target here, our target of 370, then damn it, this is so insensible here. So if we are going to reach our target of 370, then we are going to need 15%. So we are pretty much in the middle of the things, and either way we go, I would still make a lot of profits. So I'm only interested in going somewhere and not staying stationary, because in staying stationary my options will suffer from time decay, and that would mean just continued loss. So I am interested in either going up or going down. The main idea would be to go somewhere and not stay like this. So of course I would prefer going up and reaching a new all-time high, but if we decide to go down, then I'm still in the game, and I just hope these moves are going to come sooner than later. So the strategy remains the same. We don't do anything, we aren't going to do too much. We are going to wait and see what's going to happen with the markets, and pretty much because we are already positioned here with our options on the S&P 500, and as such there's nothing much you have to do. On the other side, there are the short positions here in the portfolio. So we are speaking of Amazon. Let's go back to the daily chart. So Amazon I bought somewhere here. So we still have a nice plus. Not a nice one, but we are still in plus. BioNTech got closed today, but it doesn't really matter, because I managed to cash in here somewhere. I managed to cash in, so even if BioNTech got closed today, I still managed to make a nice round profit. But for the time being, I can delete it. Or I think I'm going to send it to the top. Where is it? Top setups list, because it's looking way too good to ignore. Here, this would look like a bottom fishing candidate, and I don't want to ignore it. but for the time being it's still a downwards trend. Then Bros finished like I expected it to finish, so it's a nice position to have in your portfolio if you are going short, and it's going to remain here for a while. Also, close today was Ford. Also doesn't matter because I managed to cash in here pre-market, and as such, even though I got stopped today, I still managed to make a profit on this trade, and now it's gone from the portfolio. Let me enlarge this a bit. So now it's gone from the portfolio. Gold, we've already talked about gold IVM. This one we haven't talked about. So in the IVM, my initial setup was here, this ascending triangle, and this is the decisive point here where we went short with I think with a stop here somewhere at 205 or something like 205.5. I think this is where the stop is. So this was my mistake. As I've said in the other ones, I managed to take my profits pre-market because I was hitting the slopes pretty bad, and I wasn't paying too much attention to the market. And because this is a CFD on an ETF, I wasn't able to trade it pre-market. I had to wait for the markets to open, and as I looked, we were pretty much in plus, and it didn't make any sense anymore to close a third of the trade. That's why I've left it alone, and I hoped that we would hit the low again, just in order to be able to take some profits. For the time being, it still hasn't happened, but if the markets are going to turn around again next week, then I am bound to make my profit. If not, then perhaps I'm bound to just get stopped. Oil, same story here. It wasn't quite enough to take the first profits, and we are still in with a small profit on the way, but the stop is not that far away. So also curious what's going to happen. I liked the downside here because the downside was huge, was pretty much $80 or almost $80, but that's how it is. We'll just have to wait and see. This was intended as it was for a longer period than 2 or 3 days, so I wasn't going to get greedy or get scared and start cashing in on nothing here, so to say. And last but not least, Twitter. Also a stop where I managed to cash in pre-market yesterday, and as of such, this trade can't be a negative trade. It's heading north again, but it hasn't reached the 20 moving average. So if the general markets are going to keep heading up, then I also see Twitter going along. But if not, then I think we still might get some value here in Twitter. Okay, so this was the second part of our video. Normally I would continue with the third part, but I think it would be best for the time being, given the uncertainty, to pause here, and I will also use this time to scan the markets for some new interesting setups. And I think I will get back to you on Sunday or on Monday with a new setup list, and perhaps a couple of free ones if the market is going our way. Okay, so if you like this video, remember to like and subscribe. If you do have any questions, leave them in the comment section below, and sorry for looking like this. It's been a long week, and it should have been a vacation, but it was pretty tiresome, so see you.